But do you practically think कि 100 crore, maybe for somebody who's 30 right now or 35 right now, by the time they turn 60, 65, 70, that the 100 crore number is achievable?
In SIP, good returns are good return, but the bad returns are the best return. See, investing is like food. You like what is tasty. So in asset category where the returns are good, you feel like investing. When the returns are not coming or returns are subpar, that is the time you're testing time. And that is the time, suppose you give up on the power of compounding. There are some great theme in India, and if you play them right, you can do much better than Nifty 50 and Nifty 500. India will do exceedingly well over the next 5, 10, 20, 30 years. There's no question about it. How well your portfolio does in this journey and how you're able to compound your wealth.
Hi guys, welcome to As Pros podcast once again. And today actually I have one of my personal favorites. मैं उनको personally बहुत time से follow कर रहा हूँ. मुझे जो उनके बारे में सबसे अच्छी चीज़ लगती है कि he is very nonchalant about his opinion and he is very straightforward. He follows data. Data की पकड़ I think is one of those MFDs जिनको data की पकड़ बहुत अच्छी है. बहुत अच्छे से he uses data to explain things to people in a very simple way. So please welcome Vijay sir. Hi sir.
Thank you. Thank you very much.
So Vijay sir, आज का जो podcast होने वाला है, so I remember watching one of your videos on your YouTube channel where you talked about that 100 crores in corpus is a dream जो कि possible है for retail investors as well, right? तो हम उस पर आएंगे, but उससे पहले I would like to mention a particular quote which is there in your LinkedIn bio, right? Where you say that I don't know what is the question in investing, but the answer is mutual funds, right? So I found that quote really, really interesting. So can you explain me more about this? Like, why did you come at such a conclusion?
So this could be approached from 2-3 angles. One is when you look at investing, what essentially is investing? So people look at very differently. People look at return is the essence of investing. The way people look at taste is the essence of food. Taste actually is the last thing one should look at when look at the food. They should look at what is the nutrition value of the food and how much energy it gives. But what drives food habit? It is the taste buds which drive the food habits. Similarly, when you look at investing, return is the last thing you should look at it. The first thing you should look at is safety of capital. Right. The second thing you look at is liquidity. And when both these boxes are ticked, then only you should look at the return. And why I say that? Because investment, unlike consumable product, you buy and consume product, there's nothing to worry about it. But in investing, when you buy a product, the consumption happen maybe many, many years later. So investment is the postponement of current consumption, and the need of future consumption can come any point of time. So at that time, your money has to be liquid. So when you see from a safety perspective, when you see from a liquidity perspective, and then you also see from return perspective, it beats every other asset category hands down for large number of people. However, there could be some exceptional people who had made big money in real estate. There could be exceptional good people who made big money in equities. But these are out of millions, only few.
Right.
But in equity or in mutual fund, the story is very, very different. The second thing is that when you look at investing, wherever an individual can invest directly, whether you want to invest in equity market, debt market, real estate, commodities, the same thing can be done through mutual fund. Right. The advantage of mutual fund is the way the regulator has ring-fenced it. You have a essence of investing that is diversification. You have a sense of investing that is risk control. You have a sense of investing that is a portfolio which can be liquidated at any point of time. So all these things makes it very, very attractive. So let's look at illustration of real estate.
Right.
So in real estate, you could go and buy a property yourself, but can you diversify your portfolio? But through AIF, Alternate Investment Fund, you could look at with same amount, you could have 5-6 property in the same portfolio in AIF. Right. So now I need to change the definition from mutual fund to managed assets. So that covers mutual fund plus PMS and plus AIF. So it meets all your requirement. You need money for 1 day to 100 years. You need money, you want to generate money you want to save money for contingency, emergency, regular income, creation of wealth, meeting all your goals. So whatever you need, mutual fund managed asset is like a thali. It has everything. It has a test, it have a nutrition, it have a minerals, it have vitamins. So if you have a good Indian thali, the question is that many people don't want to eat simple food.
Yeah, right, absolutely. I think that is, yes, very well explained, that mutual fund is probably one of those asset classes जो सबसे ज़्यादा democratize है for a retail investor to participate in, and that holds true. Nobody can deny that. Now coming to that 100 crore wala number that we're talking about. Now, जब भी I think India में specifically, because we have been very conservative about money, हमने वो बड़े बड़े नंबर्स की हमें आदत नहीं है सुनने की, या फिर हम वो अचीव ही नहीं कर पाते, हमें वो अनअचीवेबल लगता है. 10 करोड़ फिर भी एक नंबर है जो मुझे लगता है आज की डेट में लोगों ने अब एस्पायर करना स्टार्ट कर दिया है, क्योंकि लोगों ने स्टोरीज देखनी स्टार्ट कर दी हैं कि लोगों ने 10 करोड़ का कॉर्पस में भी अचीव किया बाय 40, 50, 60, राइट. बट डू यू प्रैक्टिकली थिंक कि 100 करोड़ मे बी फॉर समबडी हू इज 30 राइट नाउ और 35 राइट नाउ, बाय द टाइम दे टर्न 60, 65, 70, दैट द 100 crore number is achievable?
Yes, very true. So let's look at through different analogy. When I was doing my school in colleging, 60%, 70% marks was considered to be you're topping the college.
Right.
You score 60%, you are done with life.
Yeah.
At that time, anybody told me that would tell you that 80% of the class will score more than 90%. Would anybody believe?
Yeah.
If you look at ODI test matches, you look at test matches, or you look at limited over matches, you see 1995 when India won the 83 World Cup and 85 we won the Bashan Hedges Cup. You look at the scores, 200 run, 250 run.
Right.
And today, a women cricket team scored 400 run in 50 overs. These were unthinkable at that time.
Right.
A scoring at 8 run per hour is unthinkable. In T20, even batsmen, last 5-10 overs, they had to score 8-10 runs. Nobody bother about
अभी
it.
इंग्लैंड ने 15 रन पर ओवर किया, 300 they scored.
Easily is not difficult kind of thing.
Yeah.
So similar kind of thing we could see happening in the investing world, but provided you have a right kind of guidance, then I'm telling you people can achieve 10 crore, 25 crore, 50 crore, 100 crore. If they follow proper discipline, it is not impossible, very honestly. Same thing you could look at, one more analogy. Look at Bollywood heroes of 60s, 70s and 80s. Nobody has a fit body. And when you used to look at Hollywood heroes, they always have a six-pack. And nobody thought Indian heroes could have the six-packs, but today they have.
Right.
So in various walk of life, we've demonstrated that what is best can be achieved. Why not the same thing in the business of investing? And there are many people who are working very hard to make this dream come true for many investors, and it is not very honestly a gimmick or a quote to get attention, but actually it is achievable.
And do you also think कि by the course of next 20-30 years, the way inflation will go hand in hand, the way consumption is happening in India, the way middle class is transitioning from upper middle class to specifically a category where they're choosing to spend more now, right? Do you think that 100 crore is not just an aspirational figure, but it would eventually become which is something that you should actually be aspiring for? And basically, if I were to sum it up, कि जैसे अगर आज हम बोलते हैं कि 10 करोड़, let's say, is a number for somebody, next 20-30 years, 100 crore would be that number given the way the inflation is working and other things which are tandem in place.
No, I'm not sure whether we will go. That is very difficult in the realm of history. What will happen, I don't know. But I can tell you what will happen. What I'll tell you the connection between various asset categories. So the biggest thing we should do is to invest in asset where the rate of return is higher than the spending habits we have. So rate of return has to be higher than inflation.
Right.
So if inflation shoots up, what causes inflation? The product which we are consuming.
Right.
So suppose inflation become 8%, 10%, 6%, 4%. I don't know the journey of inflation. But I know inflation is caused by the things which we are consuming.
Right.
Now, when you get up in the morning, what do you consume first thing in the morning? You consume toothpaste, toothbrush. Who manufactures these products? But these are the things visible to us. But when you go to the bathroom, it is just not the toothpaste or toothbrush you are consuming. You are consuming tubes, tiles, steel, mirrors, ceramic tiles, building material product, electric wires, switches. I'm just giving one activity of us in the morning and kind of product we are consuming.
Right.
So on average, a typical Indian consume approximately 160 listed companies product every day.
Wow.
And large part of his pockets money goes there because the food, even food, earlier there was no listed company in the food. Today you have a listed company in the food as well.
Right.
So what you are consuming, somebody else is making money. So you are a consumer of that entity, but not an investor of that entity. Equity market gives the opportunity. So if the inflation become 2%, debt return will also go down, real estate return will also go down. Expectation of the return in the economy will also go down.
Yeah.
If the inflation shoots up to 8%, then the GDP expansion will also be that way. Your salary hikes, business numbers will also expand in similar way. Debt will also be similar. Real estate will also be similar. So will be equity. So everything is interlinked. What worse? Don't worry about where will be inflation, where will be GDP. These are secondary. These are not in your hand. What is most important thing in your hand is that out of your total take-home numbers, how much do you save, and out of which, how much you invest in a productive asset. Whatever take-home salary you take, if you save 20% of that and put in equity mutual fund for 20 years, you don't need to worry about your retirement needs.
So now that Jamnagar established कर लिया है कि 100 crore dream is possible if you do it right, if the right guidance is there, and obviously in mutual funds that way is through SIPs, right? But now I would like to talk specifically about certain behavioral aspects of investing, in particularly related to SIPs. Now there is a lot of data that we have seen. Now obviously there is a boom that has happened in the wealth management industry. Nobody can deny that, especially post-COVID or during COVID as well. The wealth management or the MFD guys have really, seen massive growth, which means a lot of inflow is coming, right? But now what we are also seeing is that a lot of accounts are going dormant. A lot of stoppage ratio in the SIPs is also something which is clearly visible, right? I think to the tune of somewhere about, if I'm not wrong, the number is approximately 1 crore SIPs were stopped in just April 2025. So how do you analyze this? Because if, let's say, investors leave in between, they are obviously leaving compounding at the table, right? So what do you make of this financial behavior and how to fix it?
So I won't look at absolute SIP number being cancelled. It has to be seen in the context of what is the total number of SIPs.
Right.
Is this like comparing 2008 $1 billion sale of by FII, in 2008 $1 billion sale of some I don't know, not some amount. They sold I think 15 billion or 20 billion dollar of equity they sold, and the market corrected 60%. Now they sold a similar amount of money, the market corrected only 14%, because at that time Indian total market cap was $1 trillion. Now it is $5 trillion. So everything has to be seen in the context. So right number to see is the number of SIP getting cancelled as a percentage of not a new registration,
Right.
but as a percentage of outstanding SIP. That number is not alarming.
Right.
The number spiked off in January because of there's an industry related issue. There was some SIP which were hitting continuously. The client has already stopped, but they were hitting continuously. Now that reconciliation happened, so there is spike in couple of months. Else the number would remain the same. So I don't see any challenge with that.
Right.
Because in SIP, good returns are good return, but the bad returns are the best return. See, investing is like food. You like what is tasty. So in asset category where the returns are good, you feel like investing. When the returns are not coming or returns are subpar, that is a time your testing time. And that is a time, suppose you give up. You give up on the power of compounding.
Right.
So the question of discipline in any walk of life will remain. It will not going to go away. How much education we do, the human brain is not attuned to stay disciplined.
Right.
It will not happen any walk of life. So the best solution for people then take help for somebody who can help you. So for instance, look at health. You stay in Mumbai city or any good city.
Right.
You stay in a building where there's gymnasium, there's swimming pool. How many people go and do regular workout? But if you hire a trainer or dietitian, perhaps you'll stay on the course. So similarly, India will do exceedingly well over the next 5, 10, 20, 30 years. There's no question about it. How well your portfolio does in this journey and how you're able to compound your wealth. If you do nothing and just have a good advisor helping you in right asset allocation, the portfolio will do wonders.
Absolutely. Now, the third part, let's say, जो मैं बात करना चाहूँगा, would be regarding the asset allocation part, right? So first I'll start with mutual funds. So within mutual funds also, what is the approach that you see, right? Obviously, I have heard certain interviews of yours where you say कि at the end of the day 3-4 फंड्स हैं, इंडेक्स फंड्स ही हैं, अगर उनमें भी लोग पैसा डाल दें और इन्वेस्टेड रहे ढंग से, द जॉब इज़ डन, राइट? बट पर्सनली, हाउ डू यू invest? How do you look at mutual funds? How do you select mutual funds? What is your take?
So we do counterintuitive thing. My selection of fund is very different from what you see many the fund selection organization do. And I did a study of 1 or 2 organization where they rate the fund, and then I went back in history 3 years, 5 years, 10 years back, and looked at their rated fund and then saw the journey of those rated fund. It is very funny. So I don't look at that at all. Then I look at how does a normal investor buy fund. Either he buy on the basis of these recommendation, or he buys on the basis of what has been the highest return delivering fund in last 1 or 3 years. Very few people have the ability to see which are the fund or category of fund which are going to do well.
Right.
So what is the best way to pick those? One is that you need to have hard data, looking at rolling return, looking at category average return, looking at quartile return. Okay, these are, everybody does it. But my style of selection is a little different. Among all 40, 45, 47 asset management company, I looked at 20, 25 AMC, which I believe are great company with fantastic fund manager. And within that, I look at the fund house, or first I look at factor-based investing, where I need to put my clients' money. Right. So for last 1.5 year, if you follow my social media post, I'm saying not touch mid and small cap. So I'm more focused on flexi and large cap. So first I look at which category I should recommend to my client. After doing that, then I look at within that category, I look at the great fund manager, great fund house going through challenging time.
Right.
Why this? Because this is the way the fund manager buys stocks. They look at great organization and look at the great organization going through tough time. And they know the business lasts, tough time don't last. If same logic applied to businesses, why can't the same logic apply to selection of fund manager? But at that time, digesting that for many investors is very difficult.
Absolutely.
Because I'm giving you flexi cap, which is below the category average number, and other category, other flexi cap. So I give a flexi cap which deliver 8%, other flexi cap deliver 20%. The client will naturally look at why the hell you have been recommending me only 8% wala fund, why not 22% wala fund?
Right.
But the return which you see on the chart are history. You are investing today. Which category will do better? Which fund? So there is I'm making it very simple. It is not that simple.
Right.
The second thing is that I also very keenly look at thematic based fund, not sector fund, and it's very big difference between thematic fund and sector fund. And I look at thematic fund and I believe there are some great theme in India, and if you play them right, you can do much better than Nifty 50 and Nifty 500. So my style of investing is little data driven, little objective driven, so little different.
Got it. So very interesting insights on how you go about your investing style. Now you mentioned that some of the themes are there that you see could do really, really well for India in the next 10, 20 years. So I would like to discuss what are some of the themes, or let's say fund houses, where you see, like within those themes, certain mutual funds or fund houses that you see have really great funds. So I would like to discuss about that as well.
So I think you need to figure out very simple question, where increasingly we are spending our money.
Right.
So if you look at our basket of spending, the contribution of food is going down, but where the money is going. So one is that the money is going into healthcare. And healthcare earlier used to be just drug manufacturing company. Today, just not the drug manufacturing company. You have a diagnostic center. So how many times you used to go to diagnostic center earlier? Today, you need a job change. You need a health insurance, life insurance. If you are in fever for 3-4 days, so you keep going. The more diagnostic center you visit, more is the probability you'll take medicine. And more is the probability that you may get admitted. So there's a hospital, there is CDMO. And if you look at our food habits and the kind of lifestyle we are having, healthcare is our new FMCG. You may stop eating chocolate, you may stop eating noodles, but when the diabetics tablet or blood pressure tablet is start, it stay for you for long. And we have huge numbers of people in the age bracket of 55 plus. So healthcare is one sector. Second, consumption is a big sector because the per capita income is just $2,880. It is going up. It is rising very fast. And the more people, when the per capita income goes up, you will see discretionary spending increasing. So it will go into tourism, travel, experience, better quality food, premium kind of product people start consuming. So we'll see consumption, but it's a mega theme. Healthcare is a mega theme. Third theme is energy and power. And you see when you look at data center, you look at AI, the kind of energy requirement it has. And only 7% of Indians are using a car. And when more EV comes into play, and you will see all these things happening. So energy and power will have a big next 10, 20 years. Manufacturing, and I believe, will do exceedingly well. And we are seeing traction happening across industries. And it's very interesting when you look at the problem at one end of the industry can be a blessing for other industry. Right now, we're hearing lots of things about IT company. Now, suppose you're a fresh engineer and you're given option to work for a manufacturing company or IT company, you will perhaps work for a IT company because the location of office will be in good cities, lavish offices, good cafeteria. But when you go to the plant, you stay outside city. It is a very difficult life to live. 40-degree temperature, you need to go and visit plant. Lots of manufacturing companies were struggling to get quality engineers, but now perhaps they will get more quality engineers. So the entire manufacturing space, I think, huge exciting opportunity for all of us in India. And fifth, I believe, is BFSI, so banking and financial services industry. Earlier it was just banks. Today you have wealth company, rating companies, and the biggest revolution has happened is your mobile phone. Earlier, out of 1 lakh rupees spending, only 10,000 used to go in a formal economy. Now, because of mobile, so BFSI, healthcare, manufacturing, energy and power and consumption, these are 5 big mega trend in my opinion. And within that, all fund houses have like Nippon, ICICI, HDFC, DSP, White Oak, Bajaj, Helios, outstanding team. They have an outstanding fund management skill you have. So I think we should not put excessive focus on which mutual fund scheme. Unfortunately, that get discussed the first. Don't bother about it. Think about how much you are saving and how much you are putting in equity mutual fund and how long you are putting that money. And if you select 10 fund, whatever you try, 2 fund will be dud, 2 fund will be outstanding, 6 fund will be average. By and large, you will be able to beat inflation and create significant wealth for yourself.
Understood. Right. That's great. But in the end, what are, let's say, some of the pitfalls that you see in the investing behavior overall? Because obviously you have a lot of clients and you've been studying data for a long time. Where do you see people miss the bus?
See, it is a little unfortunate when we say that because we do compare with real estate and gold, and most people made money in real estate and gold not on the basis of any view, but the holding capacity.
Right.
You made big in gold.
The nature of those assets are that you hold them for long.
Yeah, if I tell my wife tell me that I bought at 4,000, 6,000, 8,000, now it is 1,20,000. Whenever she bought, she didn't have any view.
Right.
So patient capital come, and now we have 4-5% allocation. We have all the gyan of the world in equity, and the reason is that gold we are investing for 3,000, 5,000 years.
Right.
Real estate we are investing for 300, 200, 500 years. Bank SBI was 180-year-old organization.
Right.
Mutual fund equity culture is just
it's very new. Yeah.
And second thing, now equity has become a frontline asset category, which it was not there earlier.
Right.
So it was only in the hand of few people. Now it is getting more and more democratized. So I believe now the experience of many investors will be much, much better, because there's so much information is going about SIP, rightful investing. So biggest challenge in my opinion is very simple. People are not disciplined. And our job is not to generate return, very honestly. Our job is to make investor stay disciplined. So if you ask me, whenever people say what is the biggest risk to the market, what is the biggest risk to the economy, what is the biggest risk to this and that, so I laugh and I say, if you want to stay healthy, what is the biggest risk you carry? Pollution, clean air nahi hai, traffic jam hai. What is the biggest risk? The biggest risk are own conduct.
Right.
So similarly, the biggest risk for me when I meet an investor is basically investors' own intelligence which comes in the portfolio construct.
Right.
So it is very important that we understand these things and we create portfolio for the client on the basis of every client's unique needs. Every client, very honestly, I'm telling you, is very unique. But it is a Western construct which says, what is the one thing you need to do? What is the 5 things you need to do? What is the 7 habits of highly effective people? Indian constructs are not like that, because everybody comes with unique background. So somebody is extremely comfortable handling a disputed real estate, but is not comfortable handling a volatility in the portfolio.
Right.
So as a role of advisor, need to understand these nuances of, and at what stage in the customer's life these things plays out.
Right.
So it is very, very important that you give, advance signal to your advisor, your client कि भैया ये होने वाला है, इसको आप 50-60 साल के हो गए, अभी रियल एस्टेट खरीदना बंद करो, क्योंकि आप बेचना चालू करोगे तो कैश आएगी तो क्या करोगे उसका. So ये सारी चीज़ें आपको 5-10 साल पहले क्लाइंट को बोलते रहना चालू कर देना चाहिए. Then what happened when the moment come, he realized that, okay, and then these things get captured. So if you ask me, the biggest challenge we are facing today, very honestly, is quality of good advisors. If you get a good advisor, he will keep you on the course.
Absolutely, absolutely. I think that's the best way to end this. Usually we put a lot of blame on ourselves as investors, but like you said, being disciplined is sort of anti-brain. It is not meant to be that way. And wherein the professional advisory and a good advisor who can, as per this life situation of an investor, what he's going through, if they can plan things for them in a way and show them the vision, then most likely things would be taken more seriously. People will stay disciplined, not just for the sake of discipline, but for the sake of, because when you know that what are the inherent risks I'm carrying, and when you see the value in that, then I think discipline does not become forced. It becomes active in the way you think about things.
And very interestingly, one thing we see makes a lot of difference if the client start involving their spouses. Because women are much more family oriented. Once something is explained to कि आपके बच्चे की पढ़ाई के लिए, फिर वो पैसे को टच नहीं करने देती है. आदमी क्या, सुबह मॉर्निंग वॉक में किसी ने कुछ आइडिया दे दिया तो वो पैसा निकालता है. Women are much more sorted. So मैं खाली उनका प्रॉब्लम उनको लगता है कि उनको आता नहीं है. बट अगर वो एक सवाल पूछना चालू, अभी मैं मेरी वाइफ को पूछता हूँ, भाई तुमको खाना बनाना माँ के पेट से सीख के थोड़ी आए, तुम धीरे धीरे सीखोगे ना. सो इफ यू आस्क मी वन सिल्वर बुलेट आंसर, if more women start involving in the decision making process, खाली पहले सुने वो, उसके बाद सुनने के बाद स्मृति में चीज़ें रहती है ना, वो बाद में आती है. सुनने के बाद क्वेश्चन करे धीरे धीरे, यहाँ पैसा क्यों डाल रहे हैं, यहाँ क्यों नहीं डाल रहे हैं. आप एक लेडी को बोलते हो इमरजेंसी फंड है, आई एम टेलिंग यू, मेरे जो क्लाइंट है जिनकी स्पाउस से बात करता हूँ मैं, उनके स्पाउस को मैंने चीज़ बोल दिया ना, तो हस्बैंड से करवा लेती है वो. हस्बैंड का व्यू लेता रहता है, डोनाल्ड ट्रम्प ये कर रहा है, ये कर रहा है. सो वन सिल्वर बुलेट आंसर, if more women get involved in decision making process, then I think we'll have much more long term money coming into equities.
I think that's a really great insight and a very good note to end this. So thank you so much, sir, for coming here today and enlightening us. It has been really a great talk today.
Thank you.